Welcome to the Dividend Talk podcast, episode 50. Has Bayer made the worst acquisition of the decade? Hey guys, welcome back to another episode of Dividend Talk. I'm your co-host, Engineer My Freedom, and today I'm joined with European DGI. This is a podcast where we discuss our passion for dividend growth investing with our own unique European flavour. If you're new to the channel, please hit the like button and subscribe to us, and check out our previous episodes on YouTube and Spotify. See you on the inside. Hey, European DJI. Another Thursday night. We're recording early this time.
Yeah, definitely. I mean, weekends are busy for us these 2 weeks, so that's why we're not on the Friday. Yeah, true. It's lots of fun, I must say. I was really looking forward for this show because honestly, I know we will talk a bit later about it, but we haven't really spoken about Bayer. Yeah, it's a very, very interesting case study, I would say. So I'm really looking forward for today.
Yeah, we've kind of mentioned him in passing a few times, and we never really explained our thoughts behind it or anything. So we'll have a little look at their acquisition of Monsanto and the ripple effects that has caused. But before that, let's have a look at some news this week. I might start actually with climate change because I live here in Ireland, and I don't know if you can see that window beside me, but it's still raining. So I don't know where these climate change people are getting their information from, but it's certainly not affecting me over here. But it has had big impact on two companies that you own and one for me. So one is ExxonMobil and one is Shell. So Shell ended up going to court this week in the Netherlands, and now they're being forced by the lawmakers in the Netherlands to cut their emissions by 45% based on 2019's levels in the next 10 years. I think it's a little bit harsh on them to come from a court. I think maybe these lobbyists and activists should be targeting the governments more than the companies
Well,
themselves.
actually, to help you there a little bit, because there has been something before this with Shell. So actually, if I remember correctly, 2 years ago or something like that, citizens have prosecuted the government that the government is not doing enough against climate change. And they won the court case, I think, at the Supreme Court. So also the Netherlands as a government had to step up and do more. I don't know if it was with the Paris Climate Agreement or something like that in reference to that. I don't remember exactly. And then part of the people that prosecuted the state, as I remember, also took it then afterwards on Shell. Yeah, and there's some, I think, some big money behind it from climate activists and such. And actually, honestly, I think I have a mixed feeling about it. I think Shell was already progressive if you look at it from an oil industry and all oil majors point of view.
Mm-hmm.
But from the other side, I think it's good that it's not just like out of goodwill from the company, but that there is some really force behind it now, also by law, by public, because I think it will push Shell quicker into the transition. And I think I said usually companies, in my opinion, invent better when they are under severe pressure compared to doing it out of goodwill. Yeah.
But why target Shell solely Shell on this case? I don't see Total or I don't see BP being involved in anything here.
If you're living in the Netherlands and you're targeting the government, then Shell is a logical company after that because it's also listed in the Netherlands. Simple like that.
I'd be
and
pretty
there's
sure.
more badwill towards Shell because also the gas assets in the north, houses have been there damaged because of the empty bubbles subsurface. Also there, the joint venture, I think it might even be with ExxonMobil and Shell and the government, is also having a lot of bad press already for years. So Shell hasn't got a good reputation in many areas of the country.
It'll certainly make those other companies sweat a little bit because this is going to
Yeah.
impact them. I would imagine if it happens in the Netherlands, it will eventually move more European wide.
I think it's
Um,
already happening. I think this was just the first court case that was quickest brought to this space.
yeah. And then we see then across the pond in the United States, we have ExxonMobil, who's having a huge shake-up in the boardroom, where I think one of the hedge fund, is it Engine Number One, I
Hmm.
believe, was pushing to have more climate orientated people on the
Yeah,
board. I think they pushed for four, um, and reports that I see say that they got two, and obviously they were backed by BlackRock, which is I think the second largest
yeah.
investor in ExxonMobil. So that'll have ramifications for them as well. And they, we said before, we haven't really seen them make any
Pivoting. Yeah.
strides to that. So that's certainly going to come along the way. And if it does, would that change your mind? I know you are holding on to your shares or making up your mind. Would that change your?
I'm making already for half a year my mind up on
I
ExxonMobil.
know, I
Yeah.
know.
So, and it is just that, you know, I do blogging, I do investing, and with ExxonMobil is a hard case for me. Yeah, because the yield is good. So for me, it's rather a question about when to step out. But I lost my trust already in the board of directors because of the denial. What happened here is that the hedge fund, I think what did they own? It's like 0.2 or 0.02% of the shares. But indeed, they got the institutional investors behind them to support them, to back them up. So they got two board members. I hear actually that those two board members are really good. Yeah, these are not like people loonies or something like that. They seem to be capable as well. Um, I, I don't see that really changing my opinion about ExxonMobil. I, I'm I'm actually rather thinking then of moving my shares into Chevron,
Hmm.
yeah, or something like that. I just lost all my faith in ExxonMobil as a company as such. I find Chevron really interesting. They invested a lot and they are now harvesting these investments. I find this company much more realistic to its ecosystem.
Yeah. It's interesting you mentioned about the two new members and they might be very competent at what they do. I just have an issue that if board members are going in there with a specific agenda, which they have, they've only one agenda, which is climate change and shifting the company to that focus. Are they really there for the best interests of the company or for their own best interests?
I think for the hedge fund, right? The question is, what is the hedge fund trying to get out of it? If it's trying to get out a quick buck, then there might be a common interest with the retail investor.
Mm.
Yeah, I don't think they are in it to short the company. So in this case, I'm actually not too afraid. But the question is, do they follow the dividend growth investment philosophy? Because if it is also about putting pressure on the dividends and everything, then yeah, then the dividend might be even at risk. I haven't heard anything of this, so I don't expect it either because ExxonMobil is like AT&T. Many investors are in it for the dividend, not for the growth.
Hmm.
So that would be really stupid to do, I think.
Yeah.
Yeah, but if I see the CEO as well, I just don't have really faith, and I'm still wondering why I still have them. Yeah, it's probably because it's of the juicy dividend, I guess. Yeah.
If those two board members are listening, remember dividends are good for climate change. Keep paying those dividends.
Yes, exactly.
Okay, cool. We might move on then onto our main topic. A little bit about buyers. So do you want to introduce the company maybe just give an overview of maybe what they do and how they make money?
Yeah. So Bayer is really a traditional company in Europe. Most people know Bayer probably from the aspirin, which is a consumer product. So paracetamol, you had aspirin. So
Oh, aspirin. I
aspirin, yeah,
yes, okay,
aspirin.
yes.
So if we as children had a headache, we got those little pills that tasted like lemon. We sucked on them, and then our headaches were gone. Right. So that's the product that Bayer is known for. Bayer is also historically a really old company. It was actually in a joint venture. No, not in joint venture. Let's say before the Second World War, I think it was together with BASF, a predecessor or a company that's now under Sanofi. So a few companies together. They had to split them up after the Second World War due to some dubious practices, let's say like that. And that's where Bayer resulted out of. So their core has always been in I said in chemistry and such. They spun off Covestro a few years ago, I think just before the Monsanto deal, around that time. So the materials business. But what is really now still known for is crop science, and this was also one of its original verticals. But they also bought Monsanto, so a lot of this is in the crop science. The second pillar is pharmaceutical, and they have, for instance, how is it, a multi-billion revenue drug called Xarelto here as well. And the other one is consumer health, where we spoke about aspirin as an example, over-the-counter products here. So this is what the company really exists of, and with those three main legs, it earns its money. I'm not sure if they still have animal health as an example, but these are the three main pillars of the company, and it has been growing those businesses actually over the decades quite well. And then more recently, we saw some hiccups in the engine here with the acquisition of Monsanto. Maybe you would like to say a little bit more about this acquisition, its history, and
Yeah,
such.
we might have a look at the timeline of it, because it's quite interesting to follow what has actually happened. So around 2016, I think it was October 2016, the acquisition was agreed between the two companies. Monsanto was trading around $80 at the time, and the agreement was that they were, Bayer were going to pay $128 for it. So they were paying a nice premium for the company. The share owners agreed this deal in December, and it took roughly 18 months then for the deal to push through. So the deal pushed through in June 2018, which cost them 63 billion. And to quote the CEO at the time, he said, "Today is a great day for our customers, farmers around the world, whom we've been able to help secure and improve their harvests even better." So they were quite bullish on this. So that was in June. In August of 2018, they lost their first court case due to Roundup, and Roundup is the product of Monsanto. So you've got within 2 months of the acquisition completing, they're in court and they lose their first court case. I mean, talk about a slap in the face for investors. This was obviously going on behind the scenes a long time beforehand. It was I tried to find historical articles, and nowhere that I found, maybe there was at the time, but nowhere I found were they really upfront about this, that there was a court case coming and that there was all these hiccups going to happen. Now maybe they thought that might be it, 2018,
Yeah.
that might be it and it might go away, but no, not at all. In June 2020, we Bayer then announced that they were trying to resolve a major litigation against Monsanto, which we know that they settled for around 10 billion at the time in 2021. It was around that time actually I invested in them, because I thought this was done. This litigation has hit Bayer hard. Their share price has dropped significantly, off nearly 50%, even more, and obviously cost 10 billion to settle this case. And just when we think that's all done, in 2021, just a couple of days ago, a US judge rejects their latest 2 billion deal for future Roundup lawsuits. So I suppose the key thing to know here is why are they being sued? Why is Roundup being sued? And there was nearly 19,000 plaintiffs, as they're called, claim that they have a type of cancer called Hodgkin's lymphoma. And they got this from Roundup. Now, this type of cancer can take 10 years to be detected. So potentially people could have it and they won't know about it for 10 years. And this is why I suppose they are so adamant in trying to close out future lawsuits because they know that people in 10 years' time can still probably go and claim against them. So that's why they're being sued. They counter this and they have countless studies out there saying how safe this is. Farmers have used it for decades and it is very safe. We don't see these type of litigations in Europe, but we know the culture between Europeans and Americans are quite different when it comes to suing people. Americans will sue you if you look at them incorrectly, whereas Europeans don't really have that culture. So it's quite a journey for them, and it's quite costly. My main issue is the transparency throughout this, and shareholders feel this way because they are raising a litigation against Bayer for this because of this lack of transparency and the money that's. I mean, shareholders have lost a lot of money. If you invested in 2016 when the price was above 100, you're down nearly 50%, and it's all because of this disastrous takeover of Monsanto.
Yeah, and there are really some dubious stuff here still. But what is actually also interesting in this case, right? So Bayer claims, well, the science is on our side, yeah, but also the environmental, what is it, the protection agency or something like that, the EPA
Yeah.
in America has actually supported the claims that glyphosate, I think it's called, is not
Yes.
causing cancer. That there's no proof or something like that of this causing cancer. I don't
and
know the exact wording.
and that's what's catching them out because you would imagine, okay, they know this is coming up, they'd stick a label on it saying, okay, this might cause cancer, but they actually can't put that label on it because the EPA are saying, well, hold on now, there's been no studies found to say that this causes cancer. So they're trying to go against science and lawmakers.
Yeah, yeah, because it's a jury-based system, right? There where people like normal people in the jury they give the verdict over the case as well, right? So yeah, they're really in a difficult legal situation, I think, here, and it's uncharted territory, I think, from what I read in the reports,
Yeah.
because who are you going to fight a battle with? So maybe both. But what I also found really dubious, I remember, because I have shares from before 2016. I remember that I think it was even a Dutch guy, the CEO, or a Dutch name before, was seen as a little bit like old style. Something had to change, and this Werner Baumann now, he's the CEO. 4 weeks after he was CEO, he made the deal and announced the Monsanto acquisition. Yeah, so it was clear there was something already being cooked up there, probably
Hmm.
as part of a transition plan as well to follow up the former CEO. And this is really interesting, right? Sometimes I long so much back to this former CEO, just a boring CEO. The numbers were maybe not so exciting, but the share price would have now been probably on $150 or something like that. Yeah, instead of $50,
Hmm.
50 euros, and the 50 euros versus 50 euros. That's what opportunistic management costs. And I was profiling Werner Baumann a little bit earlier, and he has never seen another company than Bayer. He is an internal clerk, worked his ass up via the finance departments. Yeah, here became also chief of strategy. Well, if we talk about strategy, I mean, I would not trust him to even write a strategy in our company for the lowest level team that we have. If this is his track record, it's horrible. So
Yeah.
this person doesn't have any business big background in that kind of thing. It doesn't come with a chemistry background, and well, what I mean with chemistry, hasn't worked in the field like that. He has always been in staff functions, right, supporting functions. Became the CEO, so he must be good in lobbying and hitting the targets. And without knowing the person personally, if you're but I have seen this often more in other companies when a CFO becomes a CEO, and we saw this also with Peter Voser in Shell. They don't have business acumen. They don't have this because any idiot would have known that Monsanto is a company that's hated by people. I mean, I before it was acquired by Bayer, I think it was already on Netflix. Yeah, about where they were interviewing farmers and people. So you know, if this is you should have known that, and the whole reputation damage. It's just such a mismatch with the culture of Bayer that this would have been, and this was for me actually when they bought them already a red flag. I thought like it doesn't fit with each other, right? And then if you see this as well, like to your point, they must have known these litigation cases. This was probably somewhere in the fine print as a legal risk or something like that with this. I don't understand why this CEO is still here. And I think even with the AGM, there was some noises. He also straight away opened, we know we lost your trust. We are going to rebuild your trust. But maybe a part of the trust is also CEO, and we should just get a new CEO there. Yeah.
But his term has been extended last year until
Yeah.
2024.
Yeah. But they did it a bit in a sneaky way, right?
And that seems to be a common theme that I'm seeing
Yeah.
in the company. I mean, we talk about trust, and we spoke about
Yeah.
AT&T in depth about this as well. And I mean, how can you trust this board? I find it impossible to trust this
Yeah.
board,
And we have not
given.
even spoken about the terms of the deal here, right? Because when you refer to AT&T, they have one thing also in common. They went with the deal from a goodwill from 14 billion to 38 billion. They went with intangible assets from 11 billion to 36 billion. What they have now been doing, they have been writing off almost 8 billion of impairments on intangible assets after a re-evaluation of the valuation of those intangible assets in the crop science division.
Hmm.
Yeah, so I wouldn't be surprised, and they're again not so transparent in the annual report about this. But my thinking is this then the Roundup brand that was an intangible asset or something like that? They give some examples, right? But they don't use brand names and such. And again, for me, I think this whole negativity has led to devaluation of assets in this space in the crop science. Yeah, but there's still like 36 billion of goodwill on the balance sheet out of 117 billion. This is really a lot for a company like Bayer. So the acquisition also deteriorated their balance sheet heavily. So it's like really a double-edged sword that they have taken.
Yeah, and even when you look at their debt to equity, I mean, at one point it was as low as 40%. It's up over 130% now.
Yeah,
It's hard.
because what the impairments are doing is they are lowering the equity
Yes.
quite significantly. So the equity went from 47 billion to 30 billion. Yeah, that's a third lower.
Yeah.
Yeah, so you see that then in the debt figures back. It's horrible what's happening here, and you know it's just the beginning because all the goodwill paid for Monsanto is still on the balance sheet. Yeah,
And
and we know that the litigations and such are there. It's still on the balance sheet. This stuff.
yeah, and the litigations have to be paid from somewhere. It's affecting their free cash flow,
Yeah,
which is affecting us as dividend investors, as we've seen with a recent dividend cut. It went from 280 down to 2. I mean, they have to pay from that somewhere. Um, they have a very conservative dividend policy as it is. They pay 30 to 40% of core earnings, um, and always closer to the lower end of that. So when we start to see these figures being affected by court cases, of course, it's going to slash. And I think you wrote an article on that, and nearly, if I'm right, nearly predicted to the figure
yeah,
how much they would cut that by.
yeah, exactly. Yeah, exactly. And then we talk here about management and transparency, but let's also talk about incentives. Yeah, because the chairman agrees on the compensation plan for the executives, right? And a large part of their how you said in bonus is tied compensation is tied to the core EPS, and you need to know that if we talk about base salary for a person like Werner Baumann, I think it's around 1.5 million or something like that euro per year. However, long-term stock-based and cash compensation is around, no, it's differs a little bit between 2.5 and 3.5 million. So approximately the total, and by the way, short-term variable cash compensation is also around 1.5 million. So in total, his compensation is around 5 to 6.5 million every year. But if you then look at how the compensation works, yeah, it's free cash flow and core EPS. If you then look at the core EPS numbers via first the GAAP numbers, right? So I did the counting over the last 5 years. So from 2016 to 2020, there was only an EPS accounting-wise of €9 over those how you said 5 years. On the core EPS, it was €31. So, for instance, the whole 2020 numbers had a negative EPS of 10 of €10 versus a core earnings per share of 6.40. So the whole Monsanto litigation case doesn't touch his bonus.
It's
Yeah,
crazy.
it doesn't, or at least not this part of the bonus. A little bit on the free cash flow, but we have seen it in 2018 as well. Yeah, where the core EPS was 5.60, and the earnings per share gap, I think it's gap, was 1.80. And this means that his compensation didn't become 2 or 3 million; it stayed 5 to 6.5 million. So while we as shareholders saw the dividend cut from 280 to 2, we saw also the share price cut in half from 100 to 50. I said you could argue that actually the CEO benefits even from this, because in these few years that is down, he is doubling the amount of shares that he's getting via stock-based compensation. He is effectively like buying back shares at the bottom, if you
Yeah,
think about it like that.
yeah,
So he will even come much more wealthier out of it than most of us, because we have less dividends to reinvest. Yeah. So if you think of it, this whole incentive system at Bayer is just sick, and it should be changed, because it allows for all the negativity around this acquisition to be kept out of the bonus. And this, for me, like where you see that shareholder interests are totally misaligned with management interest.
100%. And that's the key line right there. They are totally misaligned, and I can see why there's litigation against them from shareholders, because they've completely hoodwinked everyone. They
Yeah.
completely hoodwinked them, all while they're reaping the benefits of cash and stock bonuses. It's crazy, and how he got how he's extended to 2024. I mean, I don't know him personally, and maybe he's nice, but he's not doing the job he's supposed to do.
No,
Not
no, he's really incompetent for the job. I can say it a bit stronger there, and I'm clueless. And so for me, Monsanto, he has this Monsanto all written over his life. Yeah, maybe he sniffed too much Roundup in the past. I don't know what's happening here, but this is his baby. All the disaster is on his
yeah,
on him as well. And the issue is that we as investors, shareholders, don't seem to be able to get him out. So, and this is what you often see, is that if the governance is not right, and for instance there are many small individual shareholders, it's hard to unite to make a strong voice. Yeah, and that's where management teams benefit from. If there are few large institutional investors like in ExxonMobil, it's a different story if you get them behind you. Yeah.
yeah. So why are analysts so bullish on this share price? I mean, the lowest price an analyst gave was €100, which
Yeah,
is nearly a 50% rise from where it is right now.
because they think like me, like a value investor, and they think that the litigation case will probably not be more than 10 billion. If you then start looking at it from a multiple point of view, and if you assume that there won't be any write-offs anymore for the upcoming future, you're talking about a PE of 8. Yeah, from the core EPS. And when you talk about PE of 8 for a company that has also pharmaceutical assets and such, and generally usually strong cash flow, then sounds really cheap. So if you're living with the narrative that it's behind them, and that although even the court case now, that you still think that the litigations will not be more than 10 to 12 billion, then this is a dirt cheap stock from that point of view. Yeah. The question is like, with the current management, this track record, which has only been a success of destruction. Yeah, if you don't discount for that in the share price,
Hmm.
yeah, then it's cheap. Yeah,
But if you look at the fundamentals, if you look at what we look at revenue, free cash flow growth. I mean, revenue right now in 2020 is the same as what it was in 2014.
yeah.
Free cash flow has declined each year since 2016. Now, there's been a massive drop this year, but before taking 2020 out of the equation, we still had 4 consecutive years of free cash flow declining.
So how many analysts do you know that predict lower cash flow or lower earnings in the next
No,
year? How many do? Yeah,
they're not going to do that. But I mean, is this a value play, or is this a company that is just
broken.
broken and declining, just full of mistrust? And is it just going to hemorrhage money away and just
So
start losing?
I still own my shares from all the time. But when I wrote that article last year, I mentioned already at the time it's not a dividend growth company for me anymore. But I did my valuation and I found it really on the cheap side. So I moved it to my 10% bucket for growth stocks or value stock, turnaround stocks, I call them, growth or turnaround. So I labeled it as a turnaround because I felt like the opportunity costs are still too interesting for me if it goes back to 80 or 90 where I think it belongs after the litigation case. Then this is good money, which I will not earn anywhere else so quickly. So that's why I was thinking like that. With this announcement today again and this week, I think I should start at least selling a part of it
Mm.
and deploy the money elsewhere. I'm still a little bit in between, but if I hear my even self talking in this podcast about the CEO and about the management, it's just not worth my money. I should just take the bite the bullet and take the loss here, which in my mind I already know it's a loss. So in my mind, I'm not thinking about my purchase price. I'm thinking about 50 as an anchor point. Yeah.
Yeah.
So that past is not the difficulty for me. So I probably need to just cut the ties totally to it and never look back to this.
I mean, if you compare this to T, right, AT&T,
Yeah,
you cut them, you sold them at a drop of a hat.
yeah.
Um,
Because with AT&T, I was also in it for different reasons.
yeah,
Yeah,
but a huge part is we have mistrust from the board. We
it's
have
similar. Yeah,
a change in thesis, so if a change in
yeah,
company dynamics, which we both can see here. The only difference I can see on your part is that going into AT&T, you were a little bit more skeptical. You were, and you
yeah,
were in them purely for the dividend, whereas you're a little bit more involved in buyers. So there's a little bit of maybe not confirmation bias, but you're a little bit more of an attachment to buyer, which means you can't let them go as easy as you did with AT&T, even though there were some similarities. And maybe that's why you moved them to your value play or your growth company.
yeah, 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 yeah.
Um, in that sense,
Yeah, you might be right there
which is
because I've done a
fascinating. Yeah,
lot of
yeah,
because I've done a lot of homework on this company.
of
Yeah.
course, yeah,
So and the homework just tells me all over the place that this is a cheap stock. If you don't discount the incompetency of management, then this is a cheap stock. Yeah.
mm,
Even the litigations, I think, are suppressing the price too much. It's like on overacting towards the downside. So that's and for me, it is really like just the let's say the 8 PE that I see and the potential that I see if they get this mess behind them.
yeah.
But how much patience can you have for having them this mess behind it? So yeah, you're true. You're right here that I know the company quite well from all the times I read all their stuff and such. It's just yeah,
For
like I told you, without Monsanto, it would have been on 150 euro now,
yeah,
not on 50.
yeah. For as long as they're in the press negatively, backed up in litigation, I don't see that share price going anywhere anytime soon.
Yeah, and that's what with this news this week. I'm also thinking like, okay, I'm not going to wait another year for it to move from 50 to 80. Then I can better deploy my money elsewhere.
Mm.
So
Would you? Here's a question for you: would you regret it if you sold and it did go to 80?
Yeah, of course, I would regret.
Hmm?
Yeah, I'm human. But there's a thing with that. Um, it would be it would not be a regret that I start blaming myself or something like that. It's more like, okay, well, it's just the fate that I had. But because this happens sometimes more often, right? That you sell it and you see something right, or although I don't sell so much, or but it could also be like you don't buy and suddenly it goes up, right? And
Yeah.
then you also regret. But it doesn't change my behavior usually when I regret.
Yeah. Cool. It's certainly a fascinating company. I had bought, like I said, I bought in June after the first settlement. I sold straight away as soon as this settlement was popped up. That the US have rejected their 2 billion. So I
Yeah.
don't know. Maybe if they settle, because they have pressed. Boy, I have said that they're going to stick to this 2 billion. So we'll
Mhm.
see there how that plays out, and if they can get that through over there, then I'd be happy to
Well,
take them as a value play.
if you ever need a CEO that is scoring 10 out of 10 on being in denial, then take him. I mean, the only thing I still sometimes have in my head, and sorry for the German listeners, but it's again a German company. Yeah,
Yes,
Volkswagen, Diesel,
work hard.
Wirecard, Bayer, and then we know that German regulators put a lot of effort on governance by having a two-tier structure in the boards and such. And it just doesn't matter, right? If people want to cook the books or want to do wrong or are just plain stupid, you can write as many letters and laws you want. It doesn't change a thing. So,
That's interesting. It's very interesting, and maybe it's something that our German colleagues can their thoughts. I'd love to hear their thoughts on it because we've seen
yeah.
some of these companies with negative press, but maybe there's examples where this two-tier structure actually works and works
Yeah.
quite well. So it'd be nice to hear both
Mm.
sides.
So, worst acquisition of the decade. And now the listeners' questions.
Cool. So we'll start with our usual. Phil, he got in just in time this week. And he asked us, what do we like better, weeks with or without trading activities?
With for me, without is like I don't feel nice. I feel like I'm missing out on something. How about you?
From a dividend portfolio perspective, weeks without trading, I prefer not to look at it. Just let it do it because I'm always have that urge or tempted to do something. What I said is going to drop, so I prefer just to get my money every month, put it in and buy a stock and go away. But I am doing a little bit more option trading, and obviously they are prefer weeks with trading. So it's like a different mindset for different portfolios. Okay, and Peter has asked us, what is your book recommendation for dividend investors? And I think he wasn't looking for beginner level, it was more like intermediate or above.
Yeah, I would definitely go for some accounting books. And with that, for instance, there's a really good book. It's called something like I will put the link in the description of the podcast, but it's kind of um, analyzing companies. Yeah, and I don't know it's from if it's from New York Times or something like that, but it explains everything: what's on the balance sheet, what's on this for media from medium I said professional point of view. So if you have done a little bit of dividend investing, are familiar with PE and these kinds of things, that's a good book because it explains you a little bit how to read the balance sheet and these kinds of things. Yeah.
Yeah, I went with the same kind of train of thought of you. So you can see I'm showing you the book. It's a book by Warren Buffett. It's called Warren Buffett and the Interpretation of Financial Statements. And honestly, it breaks down everything super, super easy, has every single term that you can need on the three financial statements and breaks it down really good. So whenever I'm going through and I'm stuck, I'll just flick through, go to the page, and voila, it tells me what it does. So
Yeah.
I'll put that link. I'll put that link in the description as well.
Cool. And then Thiago asked Thiago Diaz, what's the most undervalued company right now?
Ooh, most undervalued. Maybe Ahold, maybe, or if we're going on PE basis, maybe Bayer, PE of 8.
Bayer, yeah. Yeah. So I find this question really hard to answer because there's no clear answer for me at this moment in time. I think Ahold, Unilever, maybe even Realty Income after the acquisition. Um, I think they are good value. I think Aflac, which Thiago wrote an article about, I think is also good valued.
Yeah.
But I wouldn't call any company cheap from an undervaluation point of view at this moment in time.
Yeah. Okay. Odysseus has asked us, do you guys disclose to your colleagues at work and family about financial independence and possible early retirement? How did they react?
So I think many colleagues at work know that I'm investing in dividends and with a goal to retire early. Usually I don't get any negative reaction, rather like curiosity from few people that ask me questions how are you doing this and such. So more positive than negative, but negative usually people don't say. So I also don't know. Therefore, maybe might be that some people think that they're jealous. I don't know. So, but the people that respond are usually positive.
Yeah, people in work know, and my friends and family obviously know. In work, maybe you get this when they ask you about investment advice or questions. It's usually about meme stocks, cryptocurrency, all this shite you see in the news
Yeah, yeah,
that
yeah,
that
yeah.
they see, and they want your advice on it. And it's hard when I tell them I don't really care about that stuff. I'm a dividend investor. I have a different mindset.
Yeah.
I don't look at that. So they find it hard. Some of them find it hard. Okay, you're an investor, but you don't want to buy GameStop when it's gone up like that. And I'm like, no.
Yeah,
So
I have a similar experience. Yeah, I sometimes get really awkward questions. Questions are about precious metals.
yeah,
I don't understand that stuff either. So that's also, and people expect when you're an investor that you understand everything in investment, like all the
yes,
things.
yeah,
And I invest. I always say invest in businesses, yeah, not in stocks, and that's also really important to know. And when you invest in businesses, you start thinking different.
mm,
Because would you really like to own GameStop as a business?
no,
No, maybe to make a
no.
few quick bucks trading, but not if you consider it a business.
And I get asked for investment advice all the time. Someone actually asked me to invest money for them. I'm like, no, not a hope, not a hope.
Yeah, I get it as well, and I find that really hard to give, and so I usually don't. Yeah, and most of the people are not even interested in boring dividend investing, so it
What
makes it also easy.
what I do find funny is some of my friends and maybe family think that I'm super rich because I'm an investor. They have this perception that I have, do you know what I mean? A
Yeah,
shitload of money behind me
yeah, yeah,
because I'm
yeah,
an investor. I'm like, no, you can invest with as little as €100. I mean,
yeah,
I'm not super wealthy because I invest, but they have that perception of me, and I get those kind of
yeah.
comments, which is quite funny. But I mean, it's natural. People are curious, and people have this perception of investors, don't they?
Soon they will invite you to those chic parties and such because you're wealthy and you can go for free to all these kinds of parties with champagne.
Hey, fake it until you make it, and that isn't that the
Yeah,
saying?
exactly.
Yeah. Good question. Okay, Rafa has asked us any idea on the financial sector to add to the portfolio. He knows you don't like banks, but he was looking at someone like BAM, Tro, or the Canadian banks.
Yeah, I have no opinion about those. I generally, even if it has finance in front of it, I already step away. I think it's T. Rowe Price, right? I
Yeah,
hear a lot of good stuff on that in the dividend investment community.
yeah.
I'm not competent about the ticker itself to give a meaningful answer to that. I do like insurance companies a lot because they usually have recurring income, and if they are able to manage their risk well, it's a really good business for dividend investors. So insurance companies are the only ones where I consider myself a little bit competent, but all the rest I don't even take the time of looking into it.
Okay, I'll give them one company. And Bears Wolf wrote about this company before and put them on my radar, but it's Flow Traders. They're like an
Yeah,
investment bank, and basically, the more volatility in the market, the more money they make. They paid
yeah,
out a super high dividend this year because of the pandemic, lots of volatility. So they're one that maybe to look at. I don't know if they're undervalued at the current price. They might be fairly valued, but they're certainly a good company to check out in that sector.
yeah, yeah. Good one.
Okay, and then the last question is from a Spanish guy. I can't pronounce this name.
Interest compuesto.
Okay, and he has asked any comment on the acquisition of MGM by Amazon, and does any of us have a position in non-dividend paying stocks?
So I think Amazon is desperate for their Amazon Prime to have some more content in there, to have a little bit more than the Tom Clancy movies. I think this is it. I find it a lot of money for MGM, and it might even inflate other companies that are still out there in the market. And it clearly shows the streaming wars. So that's my thoughts about this. I think for Amazon, it's a bit easier than AT&T to make a misstep on this because Amazon can really quickly cover it with 1 or 2 years of cash flow. So I think that's how they probably saw it, as a bit of pocket money. Yeah, and in this case, for a normal company, it's a lot of money. For Amazon, probably a bit of pocket money, and it buys them some content in the streaming wars. So,
Yeah.
do I have a position in any of the non-dividend paying FANG stocks? Yes, in Facebook and Google, not in Netflix. And the other two ones of the other A is Apple, and I also own some Apple, but that's a dividend payer. And I don't own Amazon, so Facebook and Google. How about you?
I don't have any FANG stocks. My son has Facebook. I always feel like I'm too late to the party. Getting in these, they always seem so high, even though they keep going up. And I have absolutely no comment on MGM. Amazon, I mean, they have plenty of cash. They have to do something with it, right?
Yeah,
If they're not going to pay out dividends, they might as well buy small companies and get involved in streaming wars. So fair
yeah,
play to them. It could be look. It'll be good for MGM shareholders, no doubt. They'll benefit from it, but where it fits into Amazon, they buy a lot of stuff. Some stuff works, some stuff doesn't. So we'll
yeah.
definitely see how that goes.
Good one. So thank you all for the listeners' questions again. Like always, we enjoy really answering them, and really some good ones again this week. It was nice.
Yeah.
And we haven't done a stock pick for a really long time because of all the earnings, and we want to keep the podcast under an hour. But we got some questions. Can we reintroduce it again? So to be clear, it was never out-introduced, let's say. We just didn't fit in the calendar of the agenda, but we're in between earning seasons, so I'm really curious, and I believe you have one today, EMF.
Yeah, yeah. One that I wrote an article on maybe a couple of months ago was Vonovia, which are a German REIT, but if you're from Germany, they're technically not a REIT because there's a fine definition there. But it's certainly a strong company in terms of dividend. They're a stable dividend payer. They have, I think their dividend growth rate was around 15% over the last 5 years. They are, was a free cash flow payout ratio is about 10%. of their earning. Sorry, their free cash flow payout ratio is 10%. Their FFO payout ratio is about 65%, which is what you normally use for REITs. They have recently put in the news that they are going to acquire a, another company, a huge company. I think it's called Deutsche Wohin. This was
Yeah.
in the news this week. I haven't read too much about it. I know our Dividend Day group had lots in it this week. But this is going to create like a super landlord, which is I think is great news. There's a lot of negativity around Germany at the moment because there's legislation or there's the government are meeting in is it September, October, sometime later this year, and there's fear that this legislation is going to hurt landlords and push prices down and affect prices. But I think Vonovia are a little bit safe from that in the sectors that they're in. And I think Berlin is one of the cheapest, am I right? One of the cheapest rents in Europe.
That's what our German Dividend Day
Yeah.
colleague said. Yeah.
So it might not be as bad as fear. So it's pushing their price down at the moment, which might be a good opportunity to buy them. I bought some shares a couple of months ago. I haven't bought this latest dip. I know some of our European colleagues have, but it's one that I'm definitely interested in. I'm going to have a little look at them again this weekend, just to be sure that my thesis is the same. What does this acquisition mean? But at the time when I ran my fundamental analysis, they got a rating of 80. Compare that to Bayer, who I ran, got a rating of 16. So,
Yeah.
they came up pretty strong. I have a fair value price of about €60. They're trading around 50, I believe this morning. So it's definitely anyone that's interested in REITs, definitely someone to consider.
Yeah, cool. I have this company already for so long on my to-do list for
Yeah,
homework. But I've got 12 companies or so on that, so I just need to make more time for this. Maybe I need to take one time a week off from work and get through this whole to-do list and spice up my portfolio. Definitely
yeah,
one that I want to look into because I own two REITs from the US, and I could do with one from Europe.
mm,
But I also like Castellum a lot. So which to choose? Yeah, Castellum
yeah.
or
Castellan,
this one?
but the good thing about Vonovia is that they have residential units in Germany,
Hmm.
Sweden, and Austria, and I know they're looking to expand maybe into
Yeah,
Holland as well. So you're getting exposure in a lot more geographical area than Castellum, maybe.
yeah, and residential more than office. Yeah,
Yes, yeah.
also not unimportant. Good,
Yeah.
good, good. Thank you. Nice one.
Okay, so that's the end of the show. It's been really good. I really enjoyed talking about Boyer, company that you know way better than I do. But it was interesting for me to follow that timeline. As a dividend investor, I had have absolutely zero interest in investing in them. But as a value play, if their shares were to double in price, I'm certainly interested in that. So I'm going to keep an eye on their case, see if they can quash it, and then I might invest a small bit of money to see if I can follow them to the moon, as they say.
Yeah, and I have a lot of selling to do. I just sold AT&T. As I should sell some ExxonMobil. I should sell some Bayer. What I'm going to do with all this money? Maybe I just dump it all in Vonovia. Maybe that
Yeah.
one. Yeah.
Well, it was starting to sound like traders here. we're doing a lot.
Exactly,
We're doing a
exactly.
lot of selling. A lot of selling. So
Yeah, true. But it's better, usually I still make profits on selling, not on Bayer, probably not on ExxonMobil, but on AT&T I still made profits because that's one of the things, right? We are not buy and hold investors. Yeah, we are buy and evaluate
yes,
investors. Once the thesis change, it triggers us to rethink: are we in it for the right thing? And usually with this, you capture early warning signs that actually prevent you from getting into trouble. Where I'm now with Bayer. Yeah. So
yeah.
yeah.
It's like it feels like we're at a pivotal point in in this stock market. We're at the cusp of all-time highs in the bull market. We've seen lots of big mature companies that are in turnaround situations. It just feels like we're at a pivot point, and you're right.
True.
It's the perfect time to evaluate your companies and explore maybe better opportunities.
Yeah, good one. Well, EMF, like always, it was my pleasure having a chat with you again. And to all the listeners, have a great weekend, a great week again. June is starting. Enjoy the summer as well. And yeah, see you next time.
See you later, guys.